What if you spied with your little eyes an ETF that did covered calls and paid out big dividends? Well, there's plenty of ETFs that currently do this, but basically all of them do monthly covered calls. That's where ProShares ISPY and IQQQ come into play. Yeah, these fund providers are very creative with their names these days. They're all starting to just become anagrams for one another. Now, ISPY, it stands for the S&P 500 High Income ETF Fund. And then their sister, IQQQ, or IQQQ, is the NASDAQ 100 High Income ETF. Now, these are the first ETFs to be powered by a daily call options strategy. Now, what is so special about a daily covered call strategy that's so much different than all these other covered call ETFs that do monthly trades? Well, it gives high income potential. Now, when we're selling calls options each day, that can produce a high level of income. Now, I know income ETF lovers will like the sound of that. When we're in retirement, we want high levels of income. We want that cash flow coming into our pockets every single month. It's also an efficient way to generate income, right? It's tracking and targeting those NASDAQ 100 returns, harvesting those juicy premiums. Now, it also potentially gives higher returns. It's able to seek and capture returns that traditional covered call strategies may sacrifice. Now, IQQQ and ISPY, they're essentially kind of the same strategy, just across two different indexes. So let's learn even more about these funds. ProShares S&P 500 High Income ETF seeks investment results before fees and expenses, and we'll get into what exactly that is in a little bit, that track the performance of the S&P 500 Daily Covered Call Index. Now, ISPY's gains are going to get exposure to the sale of daily call options using swap agreements, and they don't actually trade the options themselves. So now you might be wondering, what are swap agreements? Well, lucky for you, I'm the king of metaphors. I got a great metaphor here, guys. So swap agreements, they're like trading different types of financial promises with another person or a company. Now, here's a simple way to understand it. So let's say you and your friend, you both have this hobby that involves trading. Like, let's say you have a friend who likes collecting rare coins, while your friend is into trading comic books. Now, let's say for some reason you want to get into your friend's hobbies, but you don't actually want to buy and trade coins or comic books yourself. So that's where the swap deal comes into play here. So you're going to make a promise. You're going to promise to give your friend the value of any rare coins you find in the future. Now, your friend is also making a promise. Your friend is promising in return to give you the value of any comic books they find in the future. Now, it's important to note, right now, no actual coins or comic books are exchanged. They don't actually physically swap coins or comic books. Instead, they're agreeing on how to value what you're giving and receiving. That's the same thing that's going on here with options. If one were to get a rare coin, they're going to calculate its value, and your friend does the same for the comic books. Now, when it's time to do the payments, let's say there's a set period. In this case, it's just a day. Let's say in our scenario, it was a year. You compare the value of the coins you promised to give with the value of the comic books your friend promised to give. If one value is higher, the person with the higher value will pay the difference to the other person. So that's why swap agreements are used. You kind of get a way to get what you want without directly buying it. You get to benefit from the other person's hobby without actually dealing with the coins or comic books yourself. People also do this as a way of hedging, right? It's a way to protect themselves against financial risk or to make investments just a little bit more predictive. It's also very customizable, right? Swaps can be designed in many ways to fit specific needs, just like how you and your friend can agree on the details of your swap. All right, guys, here, a little bit more information about their index, right? The S&P 500 Daily Covered Call Index consists of a long position in the S&P 500 Total Return Index and a short position in a one-day out-of-the-money S&P 500 index call option. So they actually give us their options position on their company website, right? So they're doing an S&P 500 index call. I'm recording this on 7/28, right? It's a weekend. Tomorrow will be 7/29, so that will be 1 day out. And then you see this thing here called the moneyness, 101.39%. Now, what on earth does that mean? If a call option is described as having a 101.39% moneyness, it means the underlying asset's price is 1.39% above the strike price of the option. Now, these are going to vary every single day. If we go to IQQQ, they actually have a different out of the moneyness here. So theirs is 102.03%. That means they're 2.03% above the strike price of the option. So that sounds actually pretty conservative to me, right? Like you would have to have the market go up a pretty good amount to even catch these. And if the market has a red day, that's just considered a big win. But just remember, the stock market doesn't always go up. This is a fund that doesn't really have any downside protection. So if the market goes down, expect the value of this to also go down. But that's always going to be a risk when you're investing in the stock market. And both of these funds have impressive exposure to the indexes that they track. So the ISPY one will have S&P 500 companies, 500 different companies, guys, that we're getting exposure to by just investing in this fund. It's a chance to potentially grow our wealth, build that generational wealth here today with the best and most powerful companies. This is a way to get into some fabulous companies like Microsoft, Apple, Google, United Health Group, Visa, right? So many Olympic commercials right now are sponsored by Visa, it seems like. This is a way to get into being an owner of all these companies that are shown right here on the screen, all for a very low price. And then, of course, we're going to get that swap agreement, that options income here. They have one with Goldman Sachs here that you can see. And then they have that S&P 500 equity index. It's going to be the same thing for the NASDAQ one. IQQQ is going to hold the 100 companies that consist of the NASDAQ 100. And then they're going to have their swap agreement as well. So how have these funds performed so far? Well, they've actually done pretty good. So the IQQQ one that tracks the NASDAQ, it came out in March of this year, late March, and so far they've been relatively flat, right? There's absolutely nothing wrong with being flat because they do pay some juicy dividends, as we're going to see here soon enough. Now, what about the ISPY one? Well, ISPY has a track record of being out since end of December 2023. And then as of today, they've grown from $40 a share to $43 a share. So that's actually a 7.34% gain in capital appreciation, which is definitely quite juicy. Now, what is that dividend yield? Well, if we took the last dividend that IQQQ has paid out, that would actually give us an annualized distribution yield of 10%. And that is very impressive. ISPY's distribution rate is actually even higher right now. That's because it's just taking whatever the last dividend was and multiplying it by 12 here. So theirs is actually 12.4%. That is extremely juicy, especially when we look at their chart. They're actually not having the dreaded word of NAV erosion. They've actually been able to increase in share price, and they're giving out a 12% yield. I would expect that to fluctuate a couple percentage points, right? These are always variable dividends. Let's actually take a look at what those dividends have been. So IQQQ so far has paid out 3 dividends. They'll pay another one here in a couple days. But so far, they've been paying out 2 that are 35 cents and then 1 that's 29 cents. Then when we go to ISPY, let's see how they've been doing in the dividends paid out category. If we go all the way down here, they started paying out dividends in February, and then we can see it kind of ranges here from 48 cents to 31 cents, back up to 35, then to 44 cents. So around that 35, 36 cent range mark. Again, you're going to get very variable dividends because the market is always a little volatile. It's always hard to predict what tomorrow will bring. Each trading day will bring different results. All right, let's see how these distributions have actually been coming out, maybe some potential tax consequences. So IQQQ's latest distribution was 96% ROC, or a return of capital to their shareholders. Now, it's not necessarily a terrible thing to be a ROC distribution, right? There can certainly be some tax advantages to that. Bad thing would be is if they kept giving out distributions that are ROC, and then we also saw their share price going down. That would just mean that they're literally just giving out their own shareholders' money right back to them. And then a lot of those shareholders think they're getting free money, when in fact they're just getting their own money paid back to them. It's quite a strange community that we have sometimes here, guys, but that is not how investing in the stock market works. So is this dividends or dividends? As we can see here, guys, it looks like right now, as of today, they're actually a profitable trading strategy. I'd like to see how this fund does under different market conditions. Market has had a little bit of volatility recently, so let's just keep seeing how they do. But as of now, this fund is definitely catching my eye. I love having so many different options, literally, when it comes to these income ETFs. Now let's just take one last quick look at the overall returns. So for ISPY, if we compare that to the S&P 500, since they came out in December of 23, they've actually just trailed the overall market 28.48% for the regular SPY or S&P 500. ISPY is at 24.25%. Again, that's still pretty impressive. Obviously, these income ETFs are not built to beat the market, so even coming that close is pretty impressive. If we compare IQQQ to the QQQs or the NASDAQ 100, we can see that IQQQ comes very close to the overall NASDAQ 100 index, 11.5%. That's with dividends reinvested, to the QQQ's 12.82%. So again, both of these funds, they, as of now, seem to be performing pretty highly. I'm very impressed so far with their performance. I want to thank my newest YouTube channel member, Doug, who now gets access to my full $200,000 portfolio, dividend portfolio, and my weekly stock alerts. Now, if you're listening to this in podcast form under the Collect Cash podcast name, be sure to leave a 5-star rating. Check out these videos right here for more great dividend analysis, and I will catch you on the next one.